Hey guys, my name is Arthur. I am CEO and founder of B2Broker group of companies. And today I would like to raise the topic about how to evolve Forex broker and to make your Forex broker in line with existing reality. Because here we are now in a very interesting time. A couple of statistics. Here, during the challenges that the Forex market was experienced through its IML regulation and so on, at the same time, crypto market has grew up in 1,500 times in 8 years. So I think nothing to speak about here more, so it's just impressive numbers. And I think who started working on the crypto market back in 2017 or even earlier, of course, now they do pretty well. They do really well. So another statistic. So here I tried to compare existing cash because M2 supply means that it's like contains all the cash, including the actual cash and electronic cash, excluding financial institutions assets. So right now it's 21 trillion, and comparing to crypto market, it's right now almost 10% of this USD M2 supply cash. So it's 2.7 billion, and of course in terms of transactions you can see transfer of volumes. So I took into consideration just two major currencies like Bitcoin and ETH, and just daily volume, it's 210 billions. Of course, such impressive numbers because of the existing price. It's also this volume was calculated when the Bitcoin was $68,000, but still, anyways, maybe now it's just 2-3% less, and it's still impressive. In terms of transfers, as you can see, every single month, just on the major coins, it's happening 51 million transfers every single month. And we do processing, we run our B2B and pay processing business, and we see how the volume of transactions and the number of transactions are growing every single day. The brokers, especially Forex brokers, every day they start accepting deposits through crypto and especially through stablecoins. Unregulated stablecoins, regulated stablecoins, but it's much more efficient, faster, no chargeback, and immediate settlement. That's the difference comparing to the credit card processing. That's why we estimated that banks on the high-risk business, in particular, they lost maybe up to 25% overall volume of transactions. Those volume moved to the crypto space, especially 50% of them, it's a stable coin growth. So we do processing, we serve 450 brokers now, our B2B and pay solution, and we see this volume, how it's growing up every single day. Next topic I would like to raise, it's about different types of cryptocurrency liquidity, because recently, I think almost 80% of the brokers, they already launched crypto CFD, and most of them, they launch crypto CFD based on the spot, like they use underlying assets for their crypto, it's a spot market, or they use just crypto CFD liquidity providers as, for example, B2Broker, and B2Broker use as underlying assets crypto spot. But the thing is that there are some other types of cryptocurrency products, and among them it's perpetual futures. And now perpetual futures, as you know, guys, it's a pretty hot topic on the market. And for example, what B2Broker does, we now building the new product, and we try to provide crypto CFD liquidity by using underlying assets, perpetual futures. So it's a bit more complex product, but still for the brokers it's more efficient and it's more cheap. than by using spot, because when you use spot, it's always more expensive than perpetuals. In terms of course, also some of the brokers, they try to provide liquidity to their brokers CFD based on the crypto futures, but this is pretty complex product for the retail users, and this is why retail users, they prefer to trade crypto CFD. Exchanges, they invented perpetual futures just to run something similar to CFD, but at the same time, it should go another way, because crypto traders, they somehow don't like the forex brokers or like forex products, and this is why exchanges, not to be like forex brokers, they had to invent something very similar, very simple, but in another way, and that's how perpetual futures appeared. Of course, there are some difference how they charge the funding rate, how they use the order book by using underlying spot order book, but still it's pretty similar and it's pretty simple. So in terms of volume, as you can see, I took like 24 hours volume on leading exchanges. So it's like just 15 exchanges, and 49 billion, it's a spot and spot margin. Spot margin means when you trade margin based on spot. For example, when you want to short your Bitcoin and you don't have a Bitcoin, you go, you borrow this Bitcoin, you sell it. You wait when the price drops, then you buy it back, and then you give back this Bitcoin. Of course, even there's some exchanges, they offer such products like you can lend your crypto to these liquidity pools, where users who want to make a short positions will be able to borrow this crypto and make and trade. So this is why 49 billions, it's all about spot. Futures 7.1, because 7.1 billion comparing to 49, because the mostly of the professional traders, they use crypto futures to hedge positions. For the hedging purposes, and this is why it's pretty complex strategy for the retail users. That's why volume's much less. And perpetual futures, because it's also about margin trading, that's why it's 71 billion. For CFD, it was pretty hard to analyze for us what is the actual volume, overall volume, how much all the brokers are doing in terms of like crypto CFD, but we think that it's approximately 50% of perpetual futures. And now more and more brokers, they implement crypto CFD, but the problem is that still some problem with the crypto CFD liquidity providers. Not problems, but issues. It's not only technical problems, but also legal issues. So next topic I would like to speak about, it's DeFi. I couldn't just skip this topic because it's one of the key components of existing reality, and DeFi itself grew up for 1 year in many times. So if we are talking about DeFi, there are different types of DeFi products or DeFi protocols, but I would like to emphasize your attention for the two main products or like opportunities. It's a staking, and there are 2 ways how to, or even 3 ways how to stake your crypto, and lending. Yield farming, it's, I think you hear time to time this definition like yield farming, but yield farming, it's just process of finding the best API, the best turn for your crypto. So, and if we are talking about lending, here you can see potential interest as a rewards that you will be getting from the lending platforms. And Wrap BTC, as you know, all the decentralized projects, they are based on the blockchains such as Ethereum and Binance Smart Chain. So basically, Bitcoin blockchain doesn't support smart contract. This is why it's impossible to run DeFi protocols or DeFi projects based on Bitcoin blockchain. This is why on some exchanges you can exchange your real Bitcoin to wrap Bitcoin. Wrap Bitcoin, it's a like actual derivative of real Bitcoin, and it's based on Ethereum and Binance Smart Chain. So of course, it's you take additional risk besides of the market risk, but that's how it works, and you are able to use Bitcoin from the blockchain Bitcoin on Ethereum or Binance Smart Chain protocols. Of course, it's advantage. Let's speak about staking now, and then we will next slide will be about lending. Staking. There are two types of staking. We define staking as two types. The first one, it's a staking when you can stake your cryptos on different like liquidity pools. For example, what you can do, one of the strategy now, for example, you hold Bitcoin. You don't want to sell this Bitcoin because you think that Bitcoin is gonna hit 100K. That's why you wanna keep this Bitcoin. But at the same time, you wanna like to some kind of make more money by holding this Bitcoin. So what you can do, you can basically lend your Bitcoin, you can borrow USDT. Usually you are able to get 50% of the valuation or even up to 70% of the valuation of your Bitcoin. Then you can buy some Pancake or Uniswap. It's the tokens of decentralized protocols. And by buying this token into the liquidity pools of decentralized exchanges, then you will be getting return in those tokens of decentralized platforms, let's say Uniswap or Pancake. And besides of that, if protocol is doing good and a lot of trades are happening there, then you would be getting more and more rewards. That's how, you know, it's one of the strategies. There are many different strategies. It depends which type of risk you are able to accept, market risk or only operational risk. So, and another type of staking, we call it like pure staking, based on the proof of stake protocols. As you know, guys, on the market, there are like three major protocols. It's a proof of work, which is Bitcoin, Ethereum, and so on. Then proof of stake. By the way, Ethereum is moving to the proof of stake as well. And on the proof of stake protocols, you can hold your crypto on the wallet, and you can become validator of the network. By validating all the transactions, you will be getting rewards. So basically, the miners, they are getting commissions, and part of these commissions, you as a validator, you will be making by validating all those transactions based on proof of stake protocol. For example, Cardano. Cardano, it's one of the famous protocol where you can just buy Cardano. You can hold your Cardano on your wallet, and this wallet belongs only to you because you hold the private keys. So this is also one of the very interesting and very secure strategy where really like hold your crypto on the wallet, and you are making some rewards on this by without any kind of operational risk. Of course, if Cardano price will drop, then but it's already market risk. Let's go back to this lending topic. So in terms of lending, it's right now already 1.7 billion USDT, like the general lending pool, and this amount is growing every single day because DeFi attracts all the users by giving them some kind of pretty high return. For example, now what many like funds are doing, they're attracting or accepting dollars, because now if you go to any kind of bank and put your dollars on the saving account, how much is you gonna get? 0.01% a year. Here on DeFi, you take the dollars, you exchange those dollars into the USDC, which is regulated stablecoin. Then you lend this USDC into the liquidity pool, in the lending liquidity pool, and then you generate your interest would be around 9, 10, 11% a year. So of course it's a very dynamic number because it depends how much into the liquidity pool, how much money is lended and how much money is borrowed. So depends on this, the protocol, the lending protocols are calculating the commissions and your rewards you are getting almost all the time. So it's just every minute, every 5 minutes. Some of the platforms also offer compound interest. What does it mean, compound interest? It means that all the rewards that you are getting, immediately you can stake back on this into this liquidity pool, and you can generate more and more. So DeFi projects now, it's a very, very hot topic on the market, and we believe that all the Forex brokers, they have to implement those products into their platform. I know that it's not easy to do so because Forex brokers, they fall under the Forex regulation, and many of them, they would love to implement crypto products into their platforms, but according to their regulations, they cannot do this. That's why many brokers, as we know, they separate brands. And they run their crypto projects under one brand and Forex projects under another brand. So what we are trying to say here, that guys, that crypto market eventually, my prediction, it would be even bigger than the Forex market because it's more clear, it's more hype, it's more influencers there, it's more, maybe even sometimes it's more simple. And especially with DeFi projects, it will boost the whole entire crypto industry to constantly release new and new products. That's why what we believe that, you know, many brokers, they try to create competition between themselves, but what we believe we can, all the Forex brokers easily can integrate NFT platforms, DeFi platforms, staking platforms, different type of crypto liquidity into their existing business models and start offering those products to their users. Of course, if you need help, B2Broker is always here, and we would glad to help you to integrate our crypto solutions into your existing operations. So, guys, I'm running out of the time. Just two things I want to mention. Last week, you can congratulate us. Last week, the Central Bank of Russia granted us broker-dealer license, and now B2Broker entered into the securities space as well. So B2Broker is going to become a full clearing member on MOEX exchange next month, and starting from February or March, we'll be delighted to open our doors and to start providing the access to securities market, to MOEX exchange in particular, for all crypto and Forex brokers in order to, you know, expand your trading products. And the second news that finally our SISIC regulated entity is fully ready. We already opened the door last month for all European clients. Also, our SISIC entity is officially in TPD regime here in London, and we are able to serve UK corporate entities as well. The rest products, if you are interested in, please come to our booths, and we would be delighted to explain about our products. Thank you very much, guys. I hope that information was really helpful for you, and see you soon. Stay healthy. Bye-bye. Thank you.